Hi, friends, welcome. So we are proceeding with the second bit of the assurance engagement or the non-audit assurance services. Okay, so we'll continue with the direct reporting. I'll share my screen right away. All right, good. So there could be direct reporting engagements. Okay, direct reporting engagement, like the name sounds, where the firm is given assignment to report specifically on some assertions made by management or by other parties, okay? So for example, the government gives the council money, a donation, some grant to undertake a particular project. You are then asked to come and assess whether they really use the funds in line with a particular project to meet all the criteria, okay? You normally give a negative assurance, not a positive assurance. So you give evidence to show that, or you write to show that there is no reason to believe that the funds were not deployed for the specific need or otherwise. Okay. Now, be careful you don't tie yourself or commit yourself by saying that the funds were spent accurately, were effectively managed. Okay. Of course, we want to ascertain the accuracy of that assertion. If you use the word effective, efficient, economically, wisely, you're committing yourself. It means you need to explain what those phrases or those clauses mean. All right. So be careful when you are giving your negative assurance and the kind of terms or terminologies that you deploy, that you use. All right. Now, assurance assignment, we know audit is a typical assurance assignment, okay? But assurance assignment will normally differ from other audit-related services in which assurance is required. Now, the assurance assignment which does not require an opinion or an assurance, a positive assurance, you normally see the differences coming up on 5 key points, 5 key elements, okay? The relationship between the parties, okay? Who is using the report, who is reporting, and who are responsible for the report, okay? The subject matter, what are we assuring? Is it the financial statements, the entire financial statements, or some other elements, okay, of the operations of the company? Look at the criteria against which we are performing this assignment. Could be IFRS, country-specific gaps, okay? And then do we have sufficient, appropriate evidence to draw down on that particular assurance we are given, and then we provide a written report. So this normally would distinguish an assurance from any other non-audit or audit-related services, okay? We want to say audit because at the end of the day, there's still some form of verification or something we have to delve into to be able to draw a conclusion or provide recommendations, okay? Now you look at all these 5 elements and you see that audit fits all of these. An audit engagement or an audit assignment where we provide a positive assurance will have to meet these 5 elements. Otherwise, anything outside of this will be considered a non-audit related assurance service, okay? All right. Again, assurance assignment examples, like I cited, audit is one. Review engagements could be, okay, if they meet those 5 elements. Risk assessment of the company, do we avoid the risk? Do we transfer the risk, accept the risk, okay, or tolerate it, any of them? Business performance measurement, we'll look at this, okay? And then system reliability, like e-commerce, social environmental audit is coming up a lot nowadays. So you hear assurance, audit and assurance of social and environmental factors, KPIs, okay? Now, what we want to say here is that in these assurance assignments, we provide we can also provide reassurance to third parties that business processes are sound, okay? Not just the shareholders who contract the firm. If it's an audit, the audit firm can still do this, okay? It is not really of a consultancy where we seek an expert advice on a particular item. It is also not an audit, okay? Because it could include non-financial items, non-social elements, green accounting, okay, governance issues, which they must report on. Okay, so they are not really an audit, neither is it an assurance, a management consultancy. What we should know is that audit firms can do this, like I cited earlier. And of course, the Big Four have actually annexed these other assurance engagements. So they are still taking the lead. I know PwC, is it UK? Yes, PwC UK, where they have a partner who has no knowledge about the traditional accounting, but is an expert in other aspects. Okay, so auditors can do it. Be careful you don't compromise on your independence because of the fees you get. Okay, now there is a need under assurance assignments to comply with the ethical codes of conduct. Like I said, be careful you don't compromise on your objectivity and independence. Maintain the highest level of quality control procedures. You will not be surprised to see that most firms, especially the Big Four audit firms, will always have a quality control and review partner or an ethics partner who will ensure that these things do not compromise on their goodwill. There should always be a letter of engagement to tell us what we are supposed to do and where we are not supposed to go. Always decide on a plan to gather evidence, consider materiality if necessary, and the engagement risk. If the risk is too high, try to avoid it, okay? And of course, before you draw any conclusions or any assurance given, even under non-assurance assignments, make sure you gather sufficient appropriate evidence to support the conclusion you draw, okay? And which format would the report take? Sometimes we just go and present orally. We don't have to write, especially under the review engagement, due diligence. Sometimes you go and talk, not much in writing, okay? So decide on the kind of the format that the report will take. Take a business performance management assurance service or non-assurance service, which you are asked. You could see that firms could be considering some risks, which is affecting their company, their business performance. They want you to come and undertake this risk assessment and provide some feedback. Now, you would have heard of the TARA model, okay? Transfer, accept, reduce, or avoid the risk. Now, normally you will see it being mapped where these, let me still use the word assurance providers. Where these assurance providers go in, I don't want to use the word auditors. They go in and check the probability of the risk occurring and then the impact that it will have on the organization. Usually, if the probability is high and then the impact is high, we always advise the firms, don't take that risk, avoid it. If the probability of the risk occurring is high, but the impact is low, we try to accept it, okay? Normally they accept it when the impact is low, but the probability is high, we accept it, okay? Just a second, okay? When the probability is high, but the impact is low, try and reduce it. I said accept. You reduce it totally because at the end of the day, the exposure risk will not be worth accepting, okay? So try and reduce the risk if the probability of the risk occurring is very high and the impact is low. Reduce the risk, okay, reduce it. But when the probability is low, the impact is low, we can accept it. I can take the risk because even if it occurs, I will not feel it much. But where the probability of it occurring is very low, but the impact is high, it could disrupt business operations. Transfer it. That's where the insurance comes in, okay? So always they try to map the risk against, map the risk in terms of the probability of it occurring, the likelihood, and then the impact that it will have on the organization, which brings about the TARA model, okay? Now, we could also be asked to undertake review of KPIs, okay? These are quite difficult. Sometimes they are qualitative, so it's difficult to assess, but we should always use the SMART. Now they said it is smarter, but let's still stick to the SMART for now, where the KPIs must be specific. Then I can actually ascertain or assess it. If it's measurable, I could always get a toolkit to measure it, okay? And if it's achievable, I have a benchmark to measure performance to see whether we've really achieved it. And if it's realistic, it's not abstract. I can actually vouch it. And if it's timely, I have a timeline within which I can check whether I met it within the timeline or I couldn't meet it. I went beyond the timeline. So KPIs assessment or assurance should be measured against the SMART criteria. Okay. Again, under KPIs, we need to be creative with questions when we are devising the KPIs. Okay, they will be different. In fact, two companies in the same industry could have different KPIs. So you must be creative enough to ensure that each one situation is different. Don't copy the other and paste it onto the other firm thinking they are all the same. Sainsbury, let me use the other ones, the popular ones we know, Aldi and then Lidl. We may think they could have the same KPIs, though they are on the same business, but their KPIs could differ. Okay, so be creative, innovative when you're vouching this. Look at, in terms of devising these KPIs, we are always advised to look at operational aspect, okay, the financial, social, and then the environmental aspect, okay. So operational, like we want to reduce waste by 10%. Financial, want to reduce administrative costs, operational expenses by 30%. Social, want to increase the level of sponsorship or community support by 30%, okay. Environmental, want to recycle the system waste, okay, 75% of the waste from the manufacturing process so that water could be recycled back into the homes for use, okay. So always be creative, set it specific, measurable, achievable, timely, realistic, okay. Now, when verifying KPIs, like I said, it's difficult sometimes, mostly difficult when it's qualitative, because we don't normally have the available toolkits to verify them. So at best, limited assurance is what we could issue, okay? And when wording it is quite difficult, so we cannot precisely word them. We'll always play safe, okay? Concept may not be well defined. When I say green accounting, what do we mean by green accounting? Your green may be somebody's brown accounting, okay? And evidence may not be sufficient, may not be appropriate, okay, as the data cannot be collected, okay? If I want to measure the quantum of carbon monoxide emissions into the system, it's difficult to measure. You need the engineers to come and help you. And even with them, it's quite difficult for them to draw down a particular toolkit to measure it. Again, we could be asked to ascertain effectiveness of internal controls, okay? So we're still citing examples of non-audit assurance engagement, okay? So consider the controls. Are they achieving the objectives for which the business set it up? Are they operating effectively? Are management overriding it? Okay. If it is someone is overriding it, report on it, okay? Look at the cost and benefit analysis. Conduct a cost-benefit analysis of the controls to see whether they are providing more value to the organization or not, okay? Any risk associated that you think could be, could cause a company to run out of business. Some control systems could be overridden. If we have collusion among senior management is not enforcing it. So the entire control system on paper looks good, but implementation looks useless. Okay, look at those. All right, we still have a long way to go. Now, prospective financial information, like the name sounds, okay, it's information based on what? Future events. It could include hypothetical assumptions about actions and timings, as well as best estimates, okay? So we could be having prospective, future-looking financial information based on what we have, axioms and postulates we have put in place. Now, when we are reviewing or conducting a non-audit related assurance service on this, an auditor or the assurer should ascertain what the information is to be used for, okay? Who is going to be the final beneficiary or user of this information? What are the assumptions and the estimates, the postulates, the axioms underlining this? And then what should be included? What time period does it cover? Okay, this will give you a clear-cut dimension or picture on where to start and how to end it. How do we use prospective and financial information? Sometimes companies use it for internal, for their internal operations, to undertake some investment appraisal, to go solicit for loans or finances to expand their business, okay? Maybe they want to issue shares, float shares on the market. So they could use that one, okay? Like I said, could also be part for looking for loans, okay? Floating bonds or long-term loans, okay? And as part of their financial report, this could also be part. So they could ask you to come. It's more like a budget, okay? But it goes beyond the budget, because at the end of the day, you are looking at detailing out an implementation plan together with the numbers, okay? So you have some narratives in terms of axioms. Now, they must be specific to the needs of the one who will use the final report. If the bank needs this to ensure that you get a loan, they must be specific to the needs of the bank. Don't bring in government scenarios or government items which they may not need, okay? And prepared on timely basis, make sure it is not out of date, okay? Procedures to undertake in this, like I said, always get an engagement letter, understand the business you are going to review, plan your procedures, mostly some analytical reviews, speak to the management, get their viewpoints, okay? Read about the business that you are going to review, you're going to assure, okay? Look at the period you will cover. Where will you get reliable information and sources of estimates, okay, for the prospective financial information? Any hypothetical assumptions they've provided, get them way ahead of time. If there are some sensitive areas, work on them ahead of time. Get some good expert knowledge to help you get these ones, okay? And also present it in a way that is acceptable to the final user, okay? Look at the disclosure formats. How do they want us to give it out? Is it in the form of written reports, okay? Again, any management assertions, get them ahead of time. Any management representations, their responsibility of what they are supposed to do, what they are supposed to give you, get them ahead of time. Now, as an accountant or an assurer, consider the timeline within which you need this particular information, or within which the prospective financial information will cover. At the end of the day, when we know the timeline, it will help us to be able to draw boundaries. Let me put it that way. We'll draw boundaries so that we don't speculate out of scope. Okay, so assumptions may be more speculative if we don't know the time period. But if we are able to set the boundaries, the timeline, our assumptions will be best estimate assumptions. Okay, we'll make some best estimate assumptions. Let's look at what you should consider to do, investigate, okay, and how to report. So best assumptions on the prospective may not be too bad. They are okay, get them. Get all the hypotheses, okay, the assumptions, let them be consistent with the information. Your prospective financial information should be prepared on the basis of the assumptions and the hypotheses that you have, so that you don't get something being prepared out of scope, okay? The financial information should be prepared in all material respects in line with the assumptions and hypotheses. And then again, it should be consistent with their historical financial statements. And if possible, in fact, so far as we are dealing with financial statement, prepare them in line with the applicable accounting principles or gaps, okay? You should also investigate, so consider those before you start the whole work. Now, in investigating, is there any likelihood that some figures have been misstated? Okay. Investigate the knowledge you have obtained during your previous engagement. If you're a new person, you must consult the previous person who was doing that work, okay? Now, look at management competence in terms of these assumptions they provided. Sometimes they give you assumptions there to satisfy their whims, and not really in terms of giving you a good information, okay? Now, also investigate the extent to which this prospective information could be affected by management's judgment, the data from which you source to be able to prepare this information. Look at the source of it, how reliable, how adequate is it, and then perform your analytical reviews, your mechanical computations, or your mechanical accounting techniques which you want to use to prove that these figures or numbers are consistent with the principles on hand. What do we then do? After we've considered, we've investigated, what do we do? Once again, the source, reliability of the data they are giving us. Check the assumptions, okay? Validate them. If you have to talk to someone to check whether these assumptions, hypotheses need to be reviewed, do that, okay? Where hypothetical assumptions are not consistent with the underlying principles, discard them. Inform them that, listen, we cannot use this, okay? Now, areas which are sensitive could vary. So that's what you have to work ahead of time. If you need expert advice, who would help you to ensure that all material aspects in terms of this sensitive information have been provided to you ahead of time. Do that, okay? Obtain written representation, once again, about management. Let them clearly put it in black and white about their assumptions, that they accept responsibility for the financial information. They are giving you their hypothesis, they are engaging you. So anything they have, they should tell you to make your life easy. We'll look at auditor liability, so that if they don't give us this and any mishap occurs, we will be indemnified from any risk that could occur to the users. There are some problem areas with these activities, okay? Now, what are some of them? Inconsistency could be one. For example, if sales are assumed to grow beyond the company's current planned capacity, then the prospective financial information will need to include the necessary investments in additional plants or machinery which has been invested, okay? Or the cost of alternative means of meeting the anticipated sales, such as subcontracting operations. So there could be inconsistency. I'm giving you that my sales could grow 10%, but looking at my production capacity is 5%. How do I reconcile these two? Are we going to invest extra into other plants which will help produce more? Am I going to buy from outside of the shelf and augment my capacity to sell? Okay, consider those ones. Otherwise, you run yourself into trouble, because the underlying assumptions and the expected financial or the projected financial statement, prospective financial statements, revenue may not jive, okay? Over optimism, sometimes assumptions could be just way out and be exaggerated. They may not jive, okay? So over optimism, we think sales will grow. And all of a sudden, COVID strikes and sales is stagnant. So over optimism on the part of management could be a problem. They are looking at past information and using that one to project. We are dealing with assumptions, axioms, okay, hypotheses. So subjectivity could play a role rather than concrete objective evidence. In terms of reporting, like we said, at best, a negative assurance could be provided. Now, it is the management's responsibility to furnish you with all information so that when you are reporting, you can report as fair as possible. Also, let them know that management is responsible for that report, okay? They have to prepare it, okay? Now, you could also provide an opinion as to whether the information is properly prepared on the basis of the assumptions given to you by management, and whether you carried out this work in line with specific or applicable standards. So you state all this in your report. Now, the purpose of providing assurance, limited assurance, okay, is that we want to give some form of confidence to the user of the report about a particular subject matter, maybe a prospective financial statement, okay, or a report on their social interventions. That report is actually the responsibility of who? The management. And they should have prepared it against a certain criteria, benchmarks, some accounting principles, okay? So that they can provide the intended user, the final user, the user of the report, the first person in this particular scale, okay, with limited assurance about the subject matter, okay? So that's the purpose. Methodology. Agree on a letter of engagement, okay? Tells you what you are supposed to do, areas you are supposed to cover, and the kind of assurance which you'll be giving. Letter of engagement will specify that. As a firm, you should then decide on the method you will use to gather the evidence, draw your conclusion, and draft your report. It's your work. KPMG used to have an audit methodology. They call it the CAM. KPMG audit methodology. I'm not sure whether they've changed it. EY used to have their audit methodology. They call it GAM, Global Audit Methodology. So every firm have their own methodology to help them to either run an assurance activity or a non-audit related assurance activity. Now, reasonable assurance reports typically are audit reports. We want to gather sufficient audit evidence. Our conclusions should match with a particular criteria. Companies Act 206, okay, GAAPs, IFRS, name them. And our report, which we give usually, is a positive. That is where you hear the true and fair view, okay? Limited assurance reports, the wording, know them. We still gather sufficient, reliable evidence, okay, to indicate. First one is sufficient, appropriate evidence, reasonable assurance. Here we gather sufficient, reliable evidence to indicate that the subject matter is reasonable, is plausible, we could accept it, okay? The report is more of a negative assurance. We have no reason to indicate that, okay? That's how it runs. Positive assurance will say true and fair view in all material respects, okay? In terms of limited assurance, the scope of work depends on the nature of the assignments. If I want you to undertake a due diligence, a specific fact-finding exercise, it depends, okay? So they will always set a measurement criteria. In reasonable assurance, we don't normally set a measurement criteria. We already have them existing, okay? But in limited, the scope of work, we talk of what you are going to review against what criteria. Okay, you question somebody, the analytical reviews you take. You do some limited compliance or limited substantive testing. We still use the same set of mindsets and skills required of an auditor in a reasonable assurance engagement. Why would we give limited assurance? Why would we engage firms on a limited assurance? Why? Because there may be a high degree of estimation and judgment. Subjectivity comes in there, okay, on a particular subject matter. Because the procedures are more limited than reasonable assignments. Because the evidence is more persuasive. So we want something we can rely on, not something conclusive. Okay. Evidence is gathered on a test basis, and the nature of the assignments may be issues. There could be issues of completeness, okay, depending on the nature of assignments. All right. I could see my time is gone past it's almost 30 minutes, but let's wrap this up. No. So an example of negative assurance based on a review of financial profit forecast could be based on our examination of the evidence supporting the assumption, nothing negative, okay, has come to our attention, which causes us to believe that these assumptions do not provide a reasonable basis for the forecast. Let's look at forensic investigation, like the word sounds. When we talk of forensic, it's split into three. Well, we have forensic audit, forensic accounting, and forensic investigation. Normally, you have these certified fraud examiners who undertake such activities. They have, in forensic accounting, we use specialized skills to conduct an examination to the company's financial statements, okay, financial statements. And normally, once you hear forensic, then there's some elements of fraud. Okay, we gather evidence about fraud in terms of forensic investigation, gather evidence about fraud, plan, review, report. Okay, so issue of criminal law comes in there. And you must understand the criminal law, and sometimes you have to subpoena some people to provide you with information. You can even go beyond the scope of your work to go get information from the banks, because the court gives you that right to do it, okay? Now, forensic accounting, like I say, court of law, so a specialized area. Not everyone does it. Not all auditors are certified fraud examiners, licensed fraud examiners to conduct this forensic accounting or investigation. So we need experts who have been given the power by a court of law to undertake that, okay? Sometimes the company doesn't even have the right to restrict you. You go all out. Sometimes they are not even aware, okay? As an expert witness, they are allowed to give an opinion which may be challenged in a criminal case. So it is always expected to be of a high standards. Certified fraud examiners, their job is quite risky. So they must do it to the highest level, the highest standard, okay? Forensic accountants are involved in fraud investigations, claim dispute resolution concerning calculation of losses, damages or compensation. And they will normally advise on what preventive and defensive mechanisms would you put in place to combat fraud. So if you look at their work, yes, they come in to detect the fraud. But at the end of the day, they advise you on how to prevent it from occurring. Okay. So it is always important that the internal controls we have in place will be strong enough to prevent fraud from occurring. But if it occurs, it should be strong enough to detect that fraud from occurring. Non-fraud work will consist of business valuations, okay, asset tracing in matrimonial or fraud cases, quantifying damages in an insurance claim, quantifying losses in the professional negligence, okay, challenging confiscations under the PCA, okay, and then appearing as an expert witness. These are examples of non-fraud work, okay. I will jump over ethics. We'll come to that. All that we are saying is that whether you're an auditor or a forensic accountant, you must comply with the 5 main ethical code of conduct. Integrity, do the right thing, even when nobody is watching you. Objective, stay objective. Make sure you are not being moved by any subjective feeling, okay? Always maintain the highest level of professional competence. Upgrade your skill to the most current status, okay? Hold the information you gather confidential. Don't use it for your personal gain. And then be professional in your work. Behave to the highest level, okay? So fraud cases could be high profile. Media could come in. They could come to your home, try to talk to you. Be careful even when you are chatting somebody on the phone. They could be just spying on you to get your information. So they must ensure they comply with all of these ethical code of conduct issued by the RSBs, okay, the supervisory bodies, okay. So take your time, read it. We'll come to that at a later time. Basic objectives. There are also agreed upon procedures, like I said, fraud, agreed upon procedures. We want to see, we want you to undertake particular activity. Okay, what has happened? How long did it take? Okay, how long has it been going on for? How was it concealed? Most fraud issues were concealed because of people giving the hints, tips. Okay, somebody goes and tips you that, listen, something is happening here. And we realize that if you look at their charts, almost 46% or to 50% disclosures of fraud are people who give hints. Whistleblowing, let me put it that way. Okay, how much is involved? Who might be involved? Okay. So to do so, we must gather enough evidence to support a legal action. And we must provide evidence to combat the fraud. When gathering the evidence, these are some of the things you could do. Speak to the staff, get source documents, validate those documents, do some calculations, some computations, okay? Identify weaknesses in the system, who is colluding, who is overriding the system. Examine financial data, emails. Sometimes you are given the right to hack into emails so that you read and understand what is happening, okay? You could even send an email to the host company with a legal backing to retrieve some emails which may have been trashed or tried to be destroyed. Now look at IT-based systems of the records. We also need IT techniques under this investigation system where we mine data. So data mining is important, where you sort data, searching for lookalikes, okay, frequency of payments made to suppliers, okay. Look at the payment size, look out for payments which are almost the same numbers, same dates, who is withdrawing cash at this time, and when is he paying it at the same time. Most fraud, let me tell you, most fraud which are concealed, which never comes to light, take place through cash system, not a check. If you use a check, it could be traced, who issues, who cashed. But when you pay cash, it's difficult to trace it. It's difficult, okay? So look at any duplicate payments, avoid any gaps, any cancellations, any round figures. Some figures are so round, there's not even a pence following up. Check them, okay? In fact, like I said, you need an expert knowledge to do this. Examples could be ledger enquiries. Look at the payables ledger. Look at the numbering system for the procurement. Does it follow a three-way match? Reconcile your order against your quotation, against the delivery notes, against the payment order. Okay. Identify suppliers which have the same address. Sometimes you see employees having links with suppliers, management at the top, sole sourcing the procurement to their own family members, okay? Look, so you have to be very keen. Time wouldn't allow. I would have shared an example of some ledger or procurement fraud examination I did, quite risky job, but we went through. Being an internal auditor, sometimes you're asked to undertake some fraud investigation. It can be crazy, but it depends. If you are rewarded adequately, it's a good job. But if you are not, then it can be a crazy job. You can also look at nominal ledger vouching, look at journals by date, who authorized, who keys in, okay, round up figures, any adjustments, who doesn't sync, just take care of it, okay. Quickly, I'll run through this again under fraud examination. Look at for IT-based searches, key searches, okay, specific names. Are they linked to something? Sometimes they want to use acronyms to cover things up. They could also use hash values, okay, look at hash values, mathematical algorithms to data in file, to turn numbers into words into numbers, or words into numbers, okay. Words into numbers or numbers to words, okay, and search for this, okay. Sometimes files could be deleted, but you can still retrieve it, okay. You can still retrieve it from the source, okay. People always have ways and means to get it. Finally, as we wrap up, reporting fraud investigations or forensic investigations, you must always address the requirements of clients as set out in an engagement letter, okay. Sometimes firms will call you to come and undertake this fraud investigation, and they have to give you an engagement letter, summarize your procedures, what you did, okay. Fraud investigation reports could be quite detailed, all right. Look at the results or findings, explanations given on what happened, the scope. Were you limited in scope of your investigation? State it. Who limited you? Who did not allow you to do your work comprehensively? State it, okay? You don't want to leave any stone unturned. Draw your conclusions and make recommendations, okay? Like I said, it is a matter of a criminal case, okay? So the expert who goes out to undertake this forensic investigation is helping the jury to take an informed decision, to make an informed decision. So they must report on facts as other witnesses will come into the docket. Sometimes you have to go in there and read your fact finding for the jury to take a decision. They are allowed to give an opinion on the interpretation of the facts, but you are not supposed to say somebody is guilty or innocent. So that gives you some form of immunity. The jury will decide together with the judge, okay? Now, experts must be given all information relevant to the issue, but nothing more. Don't give them information relating to the CEO's wife if that has nothing to do with the job, okay, about their intimate lifestyle, about the CEO having another girlfriend beside the wife. That is not part of the scope of the work. Let it be out, okay? Now, like I said, you could be cross-examined in the court and you have to answer. When you prepare the report, ask these questions, okay? Ask these questions. I'll leave it, go through and ask these questions if you're undertaking a fraud examination. All right. I'll leave it here. There are two case studies, Sweet and Low Auditors and Big Boy, page 505, and then Dunbar Holdings. Now, there's also some self-testing questions. Normally, the answers are in the same text, okay? And then there is some ACC examination there, quite a beautiful question on page 506, 507 with some analytics. I would want you to spend some good time to review that ACCA question, okay? And then let's see how it plays out. Fraud investigation, audit, and fraud investigation can be quite interesting. We've gone 40 minutes. I'll leave it here. I'll not take your time again. Once again, let me tell you, friends, what I have presented sometimes is quite elaborate than what is in the text. Sometimes the text will be just 3 pages, but the slides is quite elaborate. So I may be giving you too much work, but I'm also giving myself too much work. It's not because I love too much work or I want you to do too much work, but it's because we are the best, okay? We are better. And we want to cover all loopholes. Some of you will end up becoming fraud investigators, seasoned auditors, internal auditors. So we want to give you a comprehensive feel of what the auditing or assurance practice is. Listen, once again, we are sorry, but we have no option some universities, I don't want to mention names, they have split the module into 2 parts. So they do it term 1 and term 2. Unfortunately for us, we do everything in term 1. So it's quite comprehensive. It's quite comprehensive. No 2 ways about that. But you'll be fine. Read it like a story. Come in with a clear mind, with a technical mindset, and you'll be fine. I'll see you in the next video. Bye.